All right, so today I'm going to be speaking about EVs and also batteries as flexible grid resources. So we've heard a lot throughout this conference how increasing renewables are really changing the dynamics on the grid. They're leading to increased fluctuations in our net load patterns, leading to increased volatility in our prices and lower average prices overall as well. And so I'm going to be talking about a couple of examples of how we can deal with this new challenges on the grid. And the first is going to be looking at batteries in front of the meter, how they can capture revenue from the increasing price volatility and provide value in that way. And then also speak a bit about electric vehicles as a growing resource that exists as flexibility on the grid that can also help respond to the fluctuations in net load caused by renewables and provide value by having the system operate more efficiently. So we'll start with in front of the meter batteries. And the main point of this is how we can capture additional value through this price volatility that's growing on the grid. So here we have some example prices. I think this is from CAISO. We see pretty stable day-ahead prices and then crazy spikes in the real-time energy prices. And so a battery can provide ancillary services in hours where you would think that there's not going to be a lot of price spikes to take advantage of. It can bid day ahead into regulation markets. And then it's going to get additional revenue by reserving itself in certain hours where you think there'll be lots of price spikes, setting a high bid price and capturing revenue from those price spikes. So we're going to look at a case that we studied. This is at the Gilroy node in CAISO. And here we see that the volatility at this node is twice the amount. This is like one standard deviation, twice the amount of the average real-time price, which provides a lot of opportunity for the battery participating in real-time energy market. And we can also take a look, I think Dave might have showed some of these yesterday, at when the price spikes are happening, and this might provide some information if you wanted to have some fixed rules about what hours you bid into day-ahead ancillary products versus which hours you reserve to bid into real-time energy markets. Let's see, okay. And then at the same time in the CAISO market, we see a real increase in average ancillary prices. And so this provides a lot of revenue for what the battery will be doing most hours, because as we saw on this previous slide, there's a lot of hours where you don't expect any price spikes, and so it's better to keep the battery in the ancillary markets. And this is increasingly, these prices are increasing over time due, again, to the increasing volatility from the renewable energy. So it's both from the fact that they're just variable resources, and then also because we can't perfectly forecast their generation in all of the future time periods, then we need increased regulation resources. So this analysis was an initial valuation that's looking at a backcast based on 2016 prices. We think that it may get, as volatility and the ancillary prices continue to increase, then we expect that these revenues should only grow. This is an initial look at the co-optimization between energy and ancillaries, assuming that we could forecast the hours in which we'd want to reserve for the real-time energy. So that provides us sort of the maximum amount of money that's on the table for operating in this way. And then future work will look at different kinds of imperfect strategies around imperfect knowledge of what hours you'd want to be in which market. So we took a look at a couple different battery sizes. High power battery, this is a 30-minute battery, which can bid the most power into ancillaries. And the real-time market in CAISO is 5 minutes, so you don't need a lot of energy for any given bid, and these price spikes are normally short-lived. And then 1-hour battery and a 4-hour battery. And these 4-hour batteries are what's being promoted by a lot of the incentives in California, and it's also what's you need to be able to bid into capacity market as a flexible capacity resource in California. So it's not surprising, as expected. We see that the higher power of a battery you have, given the current market conditions and the relatively low price of capacity relative to these ancillary prices, it's much better to invest in a high-power battery at this point, participating in these wholesale markets. And so these revenues are for the same energy battery. So these are all 40 megawatt-hour batteries, and so they will have similar capital costs, although, of course, the higher power battery has additional costs due to increased power electronic needs that you have, and then potentially slight variations on the cell chemistry that you use. So at this point, I can also show we can look at these results in more detail. We have a report. This is for a different node with some slightly different battery sizes, but also in CAISO. We have a Power BI report. Oh, this is not showing at all. Okay. Sorry about this. Maybe I will, let's see if I can change it quickly, or happy to show people afterwards the interactive report we have for looking at the data of different pieces of the year, and you can scroll through and see the response to the price spikes and the different markets. But if I can quickly change my display, I'll just duplicate for now. Here we go. So this was looking at an even higher power battery, 10 megawatt hours and 40 megawatts. So this is a 15-minute battery, and I have selected here. So we see when the energy price spikes get very high, then we see a lot of participation. Green is the energy market here. There is this 15-minute battery currently under CAISO rules is restricted to only bid a fraction of its power into regulation. You're allowed to build the full power of a 15-minute battery if you're participating only in regulation over the course of a month as part of their managed program by the ISO. But these rules may change, and that will just make this 15-minute battery even more attractive. Because if you are managing the charging and SOC of your battery properly, you don't need a full hour worth of energy in order to fulfill the regulation requirements to follow the signal. And so then we see if we switch to like an hour battery, this battery now will do more participation in energy relative to because it is allowed to bid its full power into the regulation market, but it still can't make up for per kilowatt hour. It's still not going to earn more money because the price. You also have the price spikes in the real-time market. So I'm happy to show this more to people later, and I think you all are invited to our SharePoint where we have all of the Power BI reports, some of which Keith and Sean will be going through in a presentation this afternoon. All right, so in order to really compare the economic viability, though, of these different battery options, we do have to think about how much the capital cost and what kind of payback we might expect. We're seeing that battery prices are continuing to drop, and some companies, like Tesla, where I used to work, they're targeting eventually having $100 per kilowatt hour storage available. We're not there yet, but we're approaching that. These numbers are probably from 2 and 4 hour batteries, because that's most of what's on the system in places like California currently. So we expect slightly higher numbers per kilowatt hour for these higher power systems. So using some approximate capital costs, we can estimate what the payback is for these different batteries based on those revenues that we saw from their market participation. And we see that we could get on the order of 2 to 3 year payback in the CAISO market if you're at a volatile enough node.
Quick question.
Yeah.
Sorry.
So this is for, this is like directly participating in the wholesale market. So you have to be of a certain size to be allowed to participate. They have dropped what that size requirement is. I don't recall off the top of my head. I think it's on the order of, you might know. Oh, you had a question? No. Of like 10 megawatts. And there are rules about what batteries, as I mentioned, like certain power limits that are currently in place for what you're allowed to bid into different products as a battery on the wholesale market.
Okay, thanks.
For these payback periods, when are you assuming that the battery is online? Is that online today or online 5 years from now? Or?
These are for estimated 2016 capital costs. Yeah. And you would want a fast payback on these batteries since we know that the prices continue to drop, so otherwise you should just wait for cheaper batteries, and also because it will do a lot of cycling on this kind of use case, and so you wouldn't necessarily expect that it could do a full 10-year life that it might otherwise be able to do if you're only doing a cycle a day or something. All right, so then the next area of grid flexibility we're going to look at is electric vehicles. So these are currently a very small percentage of vehicles in the United States. Many places, many of these states, it's less than 0.1% here because these are out of 1,000. But it is growing, and especially on these coastal states, we see increased penetration that is starting to approach eventually getting to like 1% and then beyond. And it's growing worldwide. This is from the IEA on the bottom, to the International Energy Association, and the United States one on top. So exactly how much they're going to grow, of course, is a matter of debate. People have very different opinions about exactly what percent vehicle adoption we'll see in the coming years, but they are getting increasingly optimistic that it's going to be large. So we see a range here from by 2040 of like under 15% to potentially over 30%, depending on who's making the forecast. But even OPEC here is dramatically increasing their forecasts of what they think electric vehicle penetration will be. So this is some definite, in terms of modeling the impact of these EVs on the grid, this is uncertainty that you'd want to account for in your inputs as this continues to evolve. So what will this mean for load? We can take a look here. This is an example of PJM. If 20% of the passenger vehicles in the PJM region were electric vehicles and their owners plugged them in when they got home at the end of the day, and the amount of charging here is calculated by the number of miles that different vehicle owners drove. So this is based on the NHTS data set. And so, most of the people don't actually drive that many miles per day. And so most of the charging here is done by like 1 a.m., right when we have probably extra generation on the system, especially as wind increases and load would otherwise be low, the time when we would potentially want those vehicles to be charging. So what do we do about this? Oh, did you have a question?
Sorry, just really quickly.
Yeah.
Assuming level 1 charging or level 2 charging? Or?
This is assuming level 2 charging at home. Yeah.
What's level 1? Level 1's 120 volts.
So yeah, level 2 you need to like install something by your dryer, like similar current as your dryer plug can handle. Potentially you need an extra plug installed and special equipment. But it's something that vehicle owners like frequently invest in, at least so far. But, so this is what we can do. We can optimally time when the charging happens so that we can shift it from happening at peak times to either later at night, or now in places like California, eventually we want to be able to shift it to midday charging. And then we can also have this charging, just like a battery, can be changed instantaneously relative to other power plants on the grid. And so as renewables fluctuate, we can also adjust the charging level. And so we can look at putting these vehicles into our modeling of the grid. And so all of our models currently account for our expected non-vehicle load and the conventional power plants. And of course, we're already putting in lots of modeling of our renewable energy resources. And so this just becomes another variable that we can control in our models, from operational models through the intermediate portfolio management models and capacity expansion models, to see how this additional flexibility can provide benefits. And so here's an example looking at, this is from the New York ISO grid, looking at a scenario where they have 20% wind on the system and what kind of benefits you can get from controlling this charging. So as expected, we see a reduction in what would otherwise have been added to the peak load. We can also see some reductions in coal, either ramping or shutoffs and startups. So calculating what this means in terms of system benefits. For that New York ISO system, we see reductions in the cost of charging the vehicles on the order of 50%. Now, in terms of like this is just in terms of like the wholesale energy costs, not in terms of all the like transmission distribution costs of getting the energy to the vehicle owners. So this is not a large amount of absolute money if you think about having to compensate the vehicle owners necessarily. But as the grid evolves, this value will increase, and this also is just in terms of hourly energy cost benefits. This could also be used to provide regulation, which might provide additional cost savings in the grid.
Those are on an annual basis?
Yes, this is per vehicle per year, the change. So it costs roughly $150 of wholesale energy generation costs per vehicle per year. And then, so this is the savings. Yeah.
So you divide the 150 by 365 days per day?
Yeah, so people, like this is based on this like distribution of driving profiles across the country that was collected. And so, people are driving like 13, 20 miles a day. I have a distribution in the...
30 cents a day for charging costs?
Yeah. It's pretty cheap. So this is not what people pay, of course, because this is just the wholesale energy cost. So there's all that transmission and distribution cost that goes on top of that, and anything else that gets added in the middle from the utilities. So this is the system side benefits on the hourly energy. So we can also look at how this changes as you're making decisions about what power plants to build with the knowledge of this flexibility in mind. And so then the benefits are larger. So this was an example where we looked at New York ISO where new capacity was needed to meet a peak reserve margin. And so then we'd see larger benefits because you're changing from building more flexible generation. So this is like replacing, so there's always a trade-off here, as Brian mentioned, of the different technologies replacing each other. So here you're trading off building, you can build CCs with the vehicles providing the flexibility instead of building the combustion turbine plants that provide the flexibility themselves. We can also look at PJM. Here there's 3 different sizes of vehicle batteries. So of course, the Prius limits how much of the miles could be driven on electric mode, and the rest were driven on gas. It's a hybrid. And then at the Tesla, we see not a lot of benefit over the Volt case because no one's going to use the full range of a Tesla on a daily basis. And we can also see how this changes with the future grid. So this 2018 grid was based on some estimates of what coal plants would shut off by that time. And so because there's less coal on the system is already more flexible. And so we see the increased value from the controlled charging when you have wind on the system. But in general, the benefits are smaller than the 2014 PJM grid because it's already had to become more flexible. So what do we need to do for charging infrastructure? A study done by Elizabeth Trout, who is my colleague at Carnegie Mellon, found that only 22% of vehicles in the US have a parking spot where they could plug in somewhere that has enough power that they could charge overnight for how much people drive on a daily basis. So that means that if we want penetration levels of anything close to 20 or for sure over 20% of vehicles, we will need to have substantial investment in destination and workplace charging. Another thing to think about in places with increasing solar is how we get midday charging, which can also provide benefit, not just trying to do this middle of the night charging for wind. And so we can see here most vehicles in the fleet of vehicles in this country are parked at any given time, but during the middle of the day they are not parked at home where people have currently mostly set up of having their charging. And so that's especially workplace charging where people are there long enough that you have the flexibility to shift around when their charging might happen will be especially helpful. And there are policies that are going to make this possibly even more appealing. CAISO is proposing a load shifting product as they try to mitigate the problem of their duck curve. And so this could provide additional incentives where this charging would become even more valuable as they shift from doing it right when they get home or later in the night to when they're at work, some portion of their charging. All right, so I think that's everything I had in my main deck. If you have any questions, I'm happy to take them. I do have a little bit of information here on the set of vehicle data that I used as the basis for a lot of this. Yeah.
I have a question about the California battery scenario screen.
Yeah.
Have you looked at what penetration levels of batteries those benefits start to erode, or do they?
No, I have not looked at that yet. I don't know, Gary, if you have any thoughts on that. Penetration levels of batteries that would make start to erode the growth of volatility that we're seeing. I think it's pretty immense.
Yeah, it's enormous. Even at a given node, example, the Delmarva Peninsula, put in a 300 megawatt, 6,000 plants in 2,000, did evaluation for that. And it's been very successful. It's still the most volatile node in all of PJM. There's done very little to quiet the volatility there. So it's just a lot. And you have to also remember that the force that's driving volatility is renewable generation, right? And that's growing at a really fast clip, so far faster than batteries are. But they can and will have an effect in California, I think, just because they're creating so much of a large mandate for batteries in the state. But to quiet that volatility, they're adding 1,300 megawatts. It's going to take a lot more than that. Ryan, you might have something?
Yeah, so sorry, I just wanted to say that we've done a couple studies that even show at twice the level of the current California mandate, you're still going to see increased volatility compared to current rate. Obviously, it does help, compared to the non-storage rate, but even at twice the levels of the current mandate, it's still very large. Thank you.
You showed increasing volatility in 2017 for your California reg prices as well. How much of that do you think is due to just the water year that California is having and the resulting inability of hydro to provide that, and thus the higher prices?
Just because they're running at like full capacity right now.
Yeah.
Or they had been up until very recently. Yeah, but I think we also thought that there might have been a recalculation in the requirement for regulation that might have affected the prices for 2017.
Did they change their formula?
I know you were saying that there was going to kind of be more, they'd be trying to be more incentives for the kind of workplace charging. I've also seen in Orlando they do just like shopping. This is more city areas, but they'll have like the electric charging for shopping. So like, do you feel like incentives would kind of push to that, or would it just be more?
Yeah, because I think it may motivate people to, if they know the charging is especially cheap in the midday when they shop, it may motivate people to make some different choices about where they go if there were enough chargers for them to go to in the shops that they wanted to visit. I think that like the magnitude of that response of people is still very uncertain. Yes, go ahead.
One of the other uncertainties in this is the penetration of electric vehicles. What kind of resources are available for utility to use, given we have these demographics and other information that we would expect a certain penetration? I haven't been able to find a good answer to that.
Yeah, so there's these organizations that are providing very different forecasts. You can do, S-curve models of adoption to try to forecast based on the existing part of the curve that we've seen. But it's still going to be highly uncertain because we're so early in the curve. So you just have to take that. I think you have, when in planning, you need to take that uncertainty into account. There's sort of no way around the fact that there's a lot of uncertainty there right now.
Thanks.
All right, thank you.